So, what if you could invest your money without ever paying a commission? And what if, just for signing up, you got a free share in a company? Well, that's exactly the promise Trading212 is making. Today, we're going to dig into their promotional material and break down exactly how they make their case. I mean, this question gets right to the point, doesn't it? It's a huge frustration for so many investors watching your hard-earned returns get slowly eaten away by fees. And this is the exact pain point the Trading212 claims it can solve. And here's their core pitch, laid out plain and simple. You've got your traditional brokers over here, often charging something like £10 for a single trade. But on the other side, you have Trading212's model, zero commission. According to their own math, if you're investing, say, £200 a month, you could be saving £240 a year. That's money that stays right where it belongs, in your portfolio, working for you. But let's be honest, the thing that really grabs your attention, the thing that gets people clicking, is this number right here. The platform dangles this promotional offer of a free share worth up to £100 just for signing up. It's a pretty powerful hook, so let's take a much closer look at how this whole thing is supposed to work. Okay, so is this free share promise legit? In this first section, we're going to unpack the claims behind the platform's biggest selling point, looking at how the offer is presented and what's really holding it all together. So, the platform basically builds its case on three main pillars. First, they say the zero commission thing isn't just a gimmick. You pay the market price for a stock, and that's it. Simple. Second, they claim the free share offer is the real deal, with a randomly selected share valued anywhere from £1 to £100 getting dropped into new user accounts. And third, they stress that it's all regulated and above board. And they talk a lot about security. They make a point to mention that Trading212 is regulated by the FCA here in the UK, which means your funds are protected up to this amount, £85,000. That number is absolutely crucial for building trust, and they use it to position themselves as being just as safe as any old-school bank. Okay, so they've made their case for being safe. But once you get past the flashy offers and the big regulatory numbers, how does the platform actually work day to day? Let's dive into the core mechanics. A key selling point they hammer home again and again is simplicity. You know, their whole goal, as they present it, is to get rid of all that intimidating, complex stuff you might find on other platforms. They want the entire process, from signing up to making your very first investment, to feel totally effortless. And now for the really practical part. The Force gives a super clear step-by-step guide on how you can actually claim that free share. This is where the promises turn into a clear, actionable game plan for anyone thinking about signing up. And the process they lay out is pretty much a straight line, just 4 steps. You start by using a promo link to create your account. Then you do a quick ID check with a photo of your ID and a selfie. After that, you make a small deposit, and then boom, they say the free share should show up in your account within a few hours. So you're probably wondering, what's the catch, right? How much do you actually have to deposit to get this bonus? Well, this is where they set the bar incredibly low. The minimum deposit is just £1. It's a really smart move to make the offer feel accessible to pretty much everyone. And, of course, there's a ticking time. The material is very clear that this whole free share bonus is a limited time offer, even specifying that it expires in just 27 days. You know, it's a classic marketing move to get you to act now instead of later. But look, a sign-up bonus is great, but a platform can't survive on that alone. So once you're on the inside, what are the actual investing tools you can use? This section dives into the long-term features that the source material really likes to highlight. First up is this idea of fractional shares. They explain this so well using the example of a Berkshire Hathaway share, which costs hundreds of thousands of dollars. With fractional shares, you can invest as little as £1 to own a tiny sliver of it. It basically democratizes the whole thing, giving you access to even the most expensive stocks out there. Next up are the automation tools. AutoInvest is presented as a way to set up regular, recurring investments automatically, kind of like a robo-advisor but without the fees. And then Portfolio Pies let you build these customized, themed portfolios, like a green energy pie, for example. The platform automatically invests your money and keeps it balanced for you. It's all about that set it and forget it approach.
Now, for UK-based investors, this is a big one. The platform heavily promotes its ISA wrapper. This lets you invest up to £20,000 a year and protects all of your profits from capital gains tax. They position this as a massive long-term benefit that could literally save you thousands as your investments grow over the years.
All right, but no platform is perfect, right? To its credit, the source material does get into some comparisons and known issues. So let's take a look at how it stacks itself up against competitors and what limitations it actually admits to.
So here's how they draw a direct line between them and their competitors. They position Trading212 as way more user-friendly than the super complex interface of a platform like Interactive Brokers. And they say they're more focused on straightforward stock investing compared to eToro, which they claim pushes things like social trading and crypto a lot more. And finally, they are upfront about some important limitations. For instance, they note the platform can get sluggish during times of extreme market chaos. It's also not available everywhere. Notably, you can't get it in the US. And while the trading itself is commission-free, there is a currency conversion fee if you're buying, say, US stocks with British pounds. And they wrap up their whole argument with this classic, powerful investing quote. It's a total call to action, right? It frames the decision to start investing not as something to put off and debate forever, but as something you should do right now. And that really brings us to our final thought. The promise of free is always so tempting, but it should always make you ask a deeper question. Based on everything presented here, it kind of leaves us wondering, when a service like this gets rid of the obvious fees, what are the other costs or trade-offs involved? Something to think about. Thanks for tuning in.